All right, just a couple of minutes away from the closing bell. Pras Subramanian joining us for the next hour, but Jared Blickry here to break down the big movers of the day. Jared, what's on the move?
We're going to begin with Tesla here. You can see began the day in the green, now trading at a 2-year low, but it's sporting a market cap that just dropped below $500 million. That is the first time since 2020 that has happened. Just a reminder that the price of a Tesla stock, that is directly proportional to how much Elon can borrow against it. And another fun stat for all you value investors, Tesla at 29 times forward earnings has never been cheaper ever. And we got to move on to the travel space where we're looking at a pre-announcement by JetBlue. You can see the stock is down about 7% today, down the most in 6 months. Airline announced to investors that the key passenger traffic metric of revenue per seat mile is on the light end of their previously announced guidance of a 15 to 19% increase. Now, in addition to weak December traffic, the carrier also blamed Hurricane Nicole and fourth quarter holiday calendar timing. Elsewhere, Spirit trimmed capacity, and Alaska Airlines, they warned of soft holiday reservations. And we got to check out what's going on in the Coinbase space, the crypto space. And here we have Coinbase down 9%, trading down to a record low, by the way. More bad news hits the crypto industry. SBF in custody, Binance halting withdrawals of USDC, more questions surrounding cryptocurrency counterparties. Now, you might wonder why most of our crypto board here is in the green, and you can thank CPI this morning. This big spike up right here, well, that was on the inflation numbers that we got earlier this morning. Now, as we head into the close, let's check out where the day now stands with just a few seconds left. The Dow is up about 0.25%. The S&P 500 is up about 0.7%, and the NASDAQ up 1%. And now, just going to give you an idea of the sector action for today. And just a couple seconds left. We do have real estate in the forefront, followed by energy, communication services, material, and tech. All of those are the outperformers today. Here is your closing bell.
That wraps up today's wild trading day. All three of the major averages ending in the green, but well off their highs. The S&P was up nearly 3% at the highs of the session, closing up less than 1%. The NASDAQ up just about 1%. The Dow up 105 points. The movements today coming after that CPI report that we got this morning showing inflation cooling in the month of November. Let's talk about it, what it means for the markets here going forward. For that, we want to bring in James Liu, Clearnomics founder and CEO. James, it's great to have you here at the desk. So help us make sense of the market action that we saw today. A lot of euphoria shortly after the open, clearly losing steam quickly. What do you think it was that changed the market's mind?
Yeah, I mean, Shauna, there's a lot of mixed feelings about these reports. Is good news or is it bad news?
Yeah.
That's really what the market's trying to figure out, because this was a good report. I mean, we've talked it to death so far today, but the annualized rate for this monthly number was about 2%. So if we keep this up by the second half of next year, we could get down to 2 to 4%, which would be amazing and the best case scenario. The problem with this is that you still have the question on the Fed. There's really no question about what they'll do tomorrow with 50 basis points, but then what do they do next year? And a question about recession. I think that's the biggest divide in the market right now. A lot of folks think there will probably be a recession in 2023. We're not really in that camp. We still see a lot of strength, especially with today's numbers, but still shallow growth. And of course, that's creating dispersion in what people think might happen in the equity markets.
If you could pull out one portion of that CPI report as the best news, what is it? And what do you think will be the stickiest portion of inflation?
Yeah, so the inflation story has shifted over the last year from energy prices, supply chains, and now we're looking at core CPI. And so the best part of core CPI was everything except for shelter. Right, so everything else decreased. Used cars and trucks dropped by 2.9%, not on an annual basis, on a monthly basis. Right, so that's a big deal. But shelter is sticky. We're going to see that keep rising for a little bit longer.
Sticking with sticky shelter and housing, we saw RH CEOs talking about how the housing market is kind of collapsing as he sees it right now. Is that kind of the kind of thing that might kind of have some spillover effects for the rest of the market and even the economy?
Yeah, it's a great question, because a lot of the challenges we've seen in markets, crypto, tech, and housing so far have not really spilled over into the rest of the economy. So housing has the potential to do that. Of course, I don't think anyone's calling for a 2008 type of situation. We don't have the systemic risk that we did back then. But over time, maybe that reduces people's willingness to spend. again, we haven't seen any of that yet, so it could do that, but really no signs of it just yet.
James, what do you think this means just in terms of, or how are you approaching it when it comes to investment opportunities? Because certainly the reaction that we initially saw, that risk-on sentiment, faded very quickly. And I think a lot of investors are trying to figure out what exactly is going to lead us higher in this next rally.
Yeah, that's a difficult question because you do almost have this V-shaped pattern for the market and the economy. You have a dip next year. All of the forecasts are down, in some cases negative, again, going back to the recession question. And when you look at earnings growth, over the next year, earnings growth expectations have come down quite a bit to about 3.8% for next year before bouncing back in 2024. So if you have this V-shaped pattern, what do you do? I mean, valuations are going to be challenged over that period. So our recommendation, our suggestion to investors is you've got to have a longer time period at this stage, right? You have this blip next year, but then if you look over a longer time frame, we expect earnings to get back to 7, 8, 9% earnings growth. So that's really the challenge over the next 24 months.
Story of the day is, of course, the indictment of Sam Bankman-Fried, the collapse of FTX, the trial there, the hearing in Congress. Are you surprised at the lack of contagion? Do you expect more down the road in terms of crypto or just widespread impact?
Yeah, I mean, of course, it's terrible that so many consumers lost their funds and lost their investments in the collapse. However, this is a very different situation than we had even back in 2000 with a lot of tech stocks, or even more recently, because back then you had households that were very fully invested in tech stocks. And so when you have the tech collapse, that of course causes a wealth effect across the market. And that caused a drag for several years. And you really don't have that today. So you have a lot of folks who were invested in crypto, but that really doesn't spill over. There's no contagion effect to the rest of the economy. So that's the good news. The bad news, of course, is that it's ironic because crypto and blockchain, they're all about trustless systems, and here it's going to take a long time before that trust comes back. And again, I'm not a lawyer. I have no inside knowledge of the situation, but when you look at what happened, it looked like just good old-fashioned alleged fraud, essentially. So that's
what they said. Good old-fashioned embezzlement. Yeah.
You mentioned tech. Do you think that sort of with earnings power, that tech is sort of like an underrated sort of a sector right now? Given the fact that we could see sort of a re-rating of their profit power because of the fact that they're so kind of unfavored right now with rising rates.
Yeah, so I generally do agree with that. We like tech from a secular perspective. There are obviously lots of challenges happening in that sector, but from a long-term perspective, the power of tech, the information age, digitalization, all the new trends, those aren't going away. But when a lot of investors hear that, they think of timing, is now the time to get in. And that's where it becomes much more challenging. Obviously, layoffs are still playing out, specifically within tech. And so it'll take time for that to settle down. But this is also different from 2000 in that there's strong earnings within the tech sector, despite a lot of the challenges in how they're pivoting today.
I guess we'll see coming next year. So James Wu, thanks so much.
Thank you.